Hello, everybody. Welcome back to the Prospero.ai stock market live streams. I hope you guys all had a wonderful, long 3-day weekend, and now the markets are open back in the green today. We're going to go through all of the signals that we're seeing in Prospero on the overall markets, just to give a little bookmark of where we're at now. The QQQ is approaching up 2% on the day. The S&P is up 1.5%. Dow Jones up 1%. Russell up 1.75%, and the VIX is below 20 now, down 5% on the day. So the markets are in a very good mood. We'll see if this can stick because, like you guys have seen, the Prospero signals, they are still in bearish territory. SPY has been pinned at 0 for a few days now, so looking bad there. But actually, I have it open on my phone right now, and the QQQ just updated to 40 in net option sentiment. So feeling better in the QQQ than the SPY for sure right now. Looks like tech is the main focus, and that's right on the bull bear line. So today will be pivotal going forward to see where it ends up. And what's making the markets pop open higher this morning is probably this headline that Trump delayed EU tariffs, which were set to be 50% for about another month till the beginning of July. So we will go over that. We've covered a lot of these topics recently and how they're affecting the markets. If we can see maybe the all-time highs challenged now soon. Let's see how close we are. I think we're just a few percent away, right? Probably within 3 to 5% of new all-time highs in the markets, which if you had been told that in early April, just 6-7 weeks ago, we all probably would have been doubtful ourselves. And we have to go through Tesla sales, which were down very large in Europe in April. So I'll give you the exact number when we go over this topic. But it hasn't quite affected the shares of the stock, with Tesla being up over 5% today. What is the actual level for Tesla here? Crossing over the 350 mark, currently at 357. So Tesla shares rising. Obviously, the full self-driving launch is soon to be upon us. So the share is probably getting excited for that. And we have Elon tweeting about how much time he'll be spending on Tesla going forward. So maybe that is also affecting the stock. Then we're going to get into the big event of the week, the Nvidia earnings set to take place tomorrow after close. We'll go through Nvidia signals in Prospero, how George is planning on playing them or not, and all the repercussions of that. But also Costco is reporting this week, so we'll touch on Costco. I also, when we talk about Nvidia, want to talk about some of the other AI stocks and quantum stocks that we've seen a lot more excitement in recently. For example, CoreWeave is up over 120 today. Just IPO'd on March 28th at $40 per share. So tripling in just a couple months here. We talked about it last week, but now that it's even up more, 17% today. How does George feel about that stock? And then some other ones like IonQ and RGTI, QBTS. A lot of the other quantum players have been rallying. So what are we looking to do in that sector now that it's back in the focus, it seems? And then going on into Salesforce, which made an acquisition of $8 billion, a data management company, Informatica. Can Salesforce become a sneaky AI player in the space? They don't get a lot of coverage of being one of the more exciting like AI and tech companies, but silently making moves there. So should we be focusing on Salesforce? Let me just quickly shout out everybody who's tuning in. We're 4 minutes in now. Have 50 awesome people joining us. Please like the stream if you're watching on Twitter, on YouTube. It really helps us grow the channel. If you appreciate the live streams and the topics we covered, we would surely appreciate you hitting that like button. So thank you all. George will be in here in just a moment, and we'll get into all these topics. Then if you're a Prospero.ai newsletter receiver, and you saw our newsletter last night, you saw a new stock that was added into the portfolio that I had never heard of before. So stick around. If you don't get the newsletter, you'll have to stick around till then to hear which stock it was. But I want to ask George, like, how did this stock get on his radar? Why was it so attractive to him? and yeah, just what went into his decision of adding it into the Prospero model portfolio. Then we want to circle back around to the AI job cuts. If you guys are longtime viewers, you probably have heard George talk about his silent firing article, that he expects AI to start impacting the job market. And we actually tweeted a photo on our account just a few days ago of some of the job cuts that we've now started to see. So it seems like it's really truly starting to happen. So if the job market becomes weak, how is that going to affect the stock market? And then last but not least, we want to get into the nuclear stocks again because Trump has now signed a nuclear energy executive order looking to speed up the process that it takes for these companies to develop their nuclear reactor sites. And we've gone over before how long of a process it can be. And will this affect the stocks? We'll find out. ACLO, SMR, NNE are some of the stocks being affected in a positive way by this story. Let's take a look at them today, see if they are up again. Yeah, ACLO's up today around $50 per share. SMR is up 8% today. That's moving more than ACLO. So, yeah, a lot of these stocks are moving off of this story. But let's circle back to the Prospero signals. Hello, George. Welcome to the stream.
Hi,
Um,
Steven.
just for housekeeping for everybody that's tuning in, this is going to be one of the like when we stream at 3 p.m. and we only go for an hour. So get your questions in quickly if you want to ask us any stock specific, macro, any questions about finance, AI, business world. Let us know in the chat. We'll be happy to answer your questions here today. Oh boy, George, I just got a live update on the SPY net option sentiment. It jumped all the way up to 1, so we're off of 0 now. But we looked at
That's something. It's moving.
yeah, we looked at SPY and QQQ in the beginning of the stream. QQQ is now at 35 and SPY at 1. We're obviously seeing the markets move higher today. I think because of the Trump headline, which we'll get more into. But it seemed like our signals were starting to look more and more bearish at the end of last week. Still not quite bullish, you'd say, right now, especially in the SPY. So, with the market being up, how are you feeling about the next move for the market? Is it time to trim gains? Is it time to manage your portfolio in any specific way as we opened up green, or are you just going to watch the action throughout the day a little bit more?
I mean, if it wasn't for that news, we would probably have been more, bearish than we were in the letter, right? Um, so I think you have to, when you look at our SPY and option sentiment last week and the way it was reacting, it kind of looked like it was predicting that, that EU Trump announcement, right? Because I think I have enough familiarity with how this goes, right? Which I think is, essentially probably people around Trump hear that he's pissed off at Europe, right? Before the announcement happens. And there might be, we're going to do this, we're going to do that, and I think what we're basically seeing is some knowledge of based on how these things are bubbling up, we're going to see bets, right? Because we see pretty decisively a pullback Wednesday, Thursday, and net option sentiment without any really good market reason for why that's happening. And then the reason shows up, that there are, concerning things with Apple. There are concerning things with, the EU. And it looks like some people knew that in advance. And also have to give ourselves some credit because I think it was a few weeks ago we were talking about Tim Cook and not going on that trip. And if there could be consequences, and the answer to us was yes. And you have to and I think precisely what was said was you do have to manage your relationship with the president, on a personal level, if you're someone like Tim Cook. And I think we saw, right? That's pretty much what we saw. What happens if you don't manage your relationship with the president? Well, at the very least, you're going to get headlines, right? And I think those headlines, lead to, things with actual teeth if you don't repair, right? I'm sure, Tim Cook, after seeing this, his first thought is, I better repair my relationship with President Trump. So I think that's the cycle, and we're talking about two things in the same in different ways, right? We're basically talking about this cycle of where there's a news event and kind of like there's a news event around, I'd say growing frustrations that the Trump administration has, before it might lead to something with more teeth. So I think we saw a few of those things kind of bubbling up, and the way the market reacts to that. And Apple similarly had a very low net option sentiment last week. So you could definitely say on both fronts, it looks like the options markets had some knowledge of these events before it happened. So of course, when the market reacts, leading into that event, they're pricing in, they're pricing in a certain amount of downside, right? And I think we saw that downside priced in, and then we saw, announcement from Besant that morning that said we've got other deals coming. So I think we kind of saw the shock of that wear off. So all of these things have to get priced in. So if you're talking about, okay, there's a major event potentially going into force on June 1st, like it was originally announced, versus July 9th, you're basically where it got moved to, you're basically going to have more optimism priced into it, more time for things to happen without it being that negative event. And that's where we are in the market. You have to be nimble with this. I'm looking to actually time this right. I'm looking to time this right, and perhaps add Palantir, but I'm keeping my eye on it. It looks like we're going a little bit in the other direction.
Question from Sevi G in the chat. How are you guys feeling about the Circle IPO? Will you guys buy?
I mean, I don't love IPOs in volatile markets, right? Because the problem with volatile like IPOs in volatile markets are that even if you're right and you think the offering is priced lower than where it goes, you never know if that's going to get so much attention that it peaks and then kind of the bottom and all the momentum players fall out, and it might actually end up below the original pricing just because momentum swings one way and then it swings the other. So I don't really feel that great about any IPO in this market. I think there's better opportunities.
Well, this reminds me of what we're going to get into later when we talk about the Nvidia earnings. But CoreWeave IPO going crazy, but we'll get there just a little bit later on. What I do want to follow up on is this kind of cycle it seems the market's in 2025, where it's like we have these overhanging dates that keep getting pushed back, but there hasn't been a ton of like finalizations of any of them. So do you think this can keep going? Like, how long can this keep going on and the market be moving bullishly like it has been for the last month or so since we hit that big bottom? Or like, does a time come when the market stops trusting that they're ever going to see any finalization of any of these events?
Well, we have I think the while what you're saying is true, and we're the first people on the stream to say that like we need to see deals, right? And we need to see deals, especially if we're going to know how the market is pricing some of this stuff in. Am I delayed?
It looks pretty good on my end,
Steven?
but if anybody in the chat wants to comment,
Oh yeah,
if George's
a little bit.
voice
I
is
always
matching.
check I just started. I shouldn't even be looking at myself talk. That's not productive. I should look into the camera. As long as nobody else sees a delay. So yeah, basically we do. That being said, I think we have the UK deal. That's a good example of we got some concessions in that deal that I think I didn't expect us to get. So I think that's kind of a bull case that, I think for anyone saying that this administration has no idea what they're doing, I think that's a counterpoint, right? And then I think the other major point is China kind of backing off their hard stance against us. Even though there's no deal there, I think the speed at which that got resolved, like again, it was my impression that, especially the way it was going, that China might have a longer tolerance for the pain of the trade war, but they also backed off. So even though there aren't deals, there are some bull cases there. Now, the problem and why we're going to face ongoing volatility is, in absence of deals, the news cycle is going to continue to drive this a lot. Because one of the things I'm nervous about, if things escalate with Europe, with the EU, right, that might actually give China more ammunition to say, okay, we did think that this was a lot of pain for us, and maybe we don't want to go ahead on with the US. But actually, if the US is trying to manage an escalation of a trade war with the EU, the China might take that as an opportunity to escalate again, to really apply pressure to the US. Because one of the sticking points for the EU and the US right now is that the US wants the EU to apply more pressure to China, right? So if that goes in the reverse, not only do they not apply more pressure to China, but China kind of sees an opportunity to, band together with the EU, put more pressure on the US, where the US basically has to come to the table with better terms for both parties. That's an opportunity that's opened up. So I think that is, for wherever we can say, oh, China might not have tolerance for this and the UK got a good deal, there's that counterpoint of, oh, the UK and the US are closer allies. So it does make sense that the UK would be like very close allies. So it does make sense the UK would be the first deal maker to come to the table. But when you start to look at the EU, right, the EU stretches, pretty far to the east. So especially those more eastern countries, I would say, might feel more inclined not to bend to the US than the more western located ones. Or maybe, you can see a lot of the EU countries have kind of a stance of neutrality. So the more you kind of push them to have an opinion, the more the more that might end up blowing up in your face, and they might end up saying like, "Hey, you don't push us around. We're actually going to prove a point and go actually deal more with China."
And speaking of the EU, it is interesting to see what's going on with Tesla and their sales in Europe. It was reported that in April they were down 49%. And I don't know if it's more due to the actions of Elon that's upsetting people of Europe, or just the tariff stuff with Trump, and that's how they feel like they just don't want anything to do with USA. But whatever the case is, the sales are down, but the stock is still working. I think it's up about 5% today, crossed the $350 mark, meaning it's rallied, over 50% since its bottom in the low 200s just over a month ago. So, why can the stock work when we're getting such bad data recently for their sales?
I think it's all about AI, right? And I think if it's like the question of like how much is it Elon that's causing like EU sales, or how much, I don't know. Like I think it's probably a lot of things, and I think it's probably just like I think for some of it, it could also just be, there's virtue signaling in the US. There's also like kind of virtue signaling in, anywhere now. It could be a point where it's just like, maybe you don't have that strong of opinion on the US or Elon or whatever, but you don't want to buy a Tesla because other people have a strong opinion on it, right? And you don't want to have a discussion about why you bought a Tesla with people. I think that's always a very real thing as well. But it's all about AI, right? And I think June is when like the FSD test happens. I mean, I think people are very excited about the Tesla bot. There was a pretty cool demo of it, although based on how some demos have gone with it in the past, I'd be a little concerned about how much those demos are, those demos are the actual bot. And it's not just Tesla. There's been a lot of kind of sketchy, I would say, robot demonstrations that kind of fall flat on their face. So yeah, I mean, it's an AI play. I think people I think people that are excited about Tesla, one of the main risk factors I thought was actually just like, the strain of Elon and the shareholders and kind of his divided attention, and him even admitting himself that it wasn't a productive thing. So I think him going back all in AI, I think that's what's carrying it. But it is one of the more interesting, things that we've seen in terms of a rarely do you see a growth company like Tesla, where so much of what's priced in is future growth, actually have problems with declining sales yet maintain, all the hype around them. It's one of the more interesting, stock case studies I've ever seen.
Do you think any of the excitement in the stock has to do after Elon tweeted he's going to be back working on his company's 24/7, 365? I think he said he's even sleeping in the factories again. So Elon is turning on founder mode at Tesla. Is that affecting
Yeah,
it?
I mean, I mentioned that as like I think him being more involved is definitely a bull signal for a lot of people. I mean, I don't know if I'd ever like, I think it's kind of funny. He doesn't have a limit like to what he's like, "Oh, maybe I've crossed a lot." Like to me, I don't necessarily want like I'm very comfortable with a CEO going home and sleeping in their own bed and coming back to work early in the morning. I don't think anybody sleeping in any factories is a very good way to like get the maximum production. And it's like those poor workers in that factory. Like imagine if Elon Musk is there, all night and he could wake up at any point and like and say something to you. Like that's a weird situation. So yeah, I mean, I think some of the things he says are hyperbole. I'm pretty sure he's not like maybe he's slept in there a night or two, but I don't think he's like set up a cot in some factory. That he's sleeping on every night. But yeah, if he did, I think that's kind of more of a bug than a feature. But there's plenty of people that just like there's plenty of people that just get excited that are so excited about Elon Musk that might be the right way to reach them. I'm a little more practical in how I think about these things.
So Mario commented, following up on the trade deals, that they're a little bit broad brush, and he thinks there might be challenges in the fine details of the agreements. Do you foresee that being an issue as well?
Um, I don't know. Like I said, I think the UK one is close enough, like where they like it's kind of like these things don't have to be done. I think the UK one is enough progress that there's a willingness there for them and they bend it on some key things. I think including like steel tariffs on China was one of the things that they agreed on, or maybe it was aluminum. Um, but yeah, I think that that's the main thing that people are looking for, where it's just like, okay, is this tactic? Are these effective? Can we hope for better trade deals on the other side? Um, I think there's a lot to it still. I do, but that's what I'm saying. Like, I do think until these deals are inked solid, we're going to see a volatile news driven market, right? And it's going to be up and down where it's just like, oh, like things look figured out. We're going in the right direction, smooth sailing ahead. And then you see something like the headline last Friday, and you're just like, okay, maybe this isn't so sorted out. Because like I said, it's not just whether that deal is figured out or not, right? It's also like, okay, if tensions are escalating in this one spot, you're giving more leverage to someone else that might want to escalate tensions again against you again. So that's, I think, what adds the uncertainty. That's what adds like the downside and the volatility.
All right, getting into the main event of the week, the Nvidia earnings. So I feel like for a long time in our signals, obviously you were kind of out on semi stocks before we made that change just a little while ago when Trump lessened restrictions. But Nvidia was always like lagging an upside in the signals. I feel like, which I think you said meant people were not confident of their long term, even though the net option sentiment always looked good. But now they look bullish in both. So how are you feeling about Nvidia heading into the earnings, the outlook for them, and what Jensen Huang will say?
I mean, I think it's really going to, and this has been, this is kind of a unique feature, I would say, of this like market volatility, right? Is I think it really, really depends for me on what kind of market we're dealing with that day. I think if we're dealing with a more, bullish market, if people are feeling optimistic, I think I'm much more likely to hold through that earnings. But if it's a negative one, red that day, I'm much more likely to drop. But I'll read some more things heading into it. I want to make sure that I'm well prepared but yeah, that's gonna be a tough one. I feel like there's more, especially with them expanding the like chipsets that they can deal with, becoming more, agreeable and perhaps revenue oriented there versus kind of like protectionist oriented. Um, and then you also have some of those restrictions being lifted. That's very bullish, and I could easily see them announcing raised guidance based on that. And people with Nvidia and raised guidance, they go crazy. So I'm probably talking myself into holding for earnings more than not, as long as things look bullish that day. Like, and even if it's like close to even, I probably will still hold. But we'll look.
So talking about like the quantum stocks, IonQ last week had a day where I think they went up like 40%. And it was basically because or I think it was because the CEO said he wants to be the Nvidia of the quantum sector. A lot of other quantum stocks have been running. CoreWeave has now tripled since it IPO'd just like 2 months ago. I think it crossed $120 per share today, and they went public at 40. Do you think if Nvidia, has kind of just regular earnings or maybe even slightly disappointing, would you be more interested in like shorting some of those stocks versus Nvidia itself, or even longing them if Nvidia like blows it out of the water? Do you think they are kind of more like a leverage play of Nvidia at this point?
Yeah, I mean, we always talk about like how momentum plays into the market. And I just think with CoreWeave, like especially if we don't face any like any big like escalating tariffs or any of those risks, like CoreWeave could keep running, right? And we looked at the valuation of CoreWeave versus Nvidia, and it's crazy that it's trading at this. I think we saw that until 2020, it was maybe 2027 or 2028, it didn't even have a positive PE. And then you're sitting on Nvidia, which is like, I don't know what the growth projections are in comparison to CoreWeave, but I can't see CoreWeave being, that much more significant. And even if they are, it's probably at a fraction of the revenue. So yeah, I don't. People are crazy with this stuff these days. It's just like it's such a it's what some people might not realize, and I think people look at this the wrong way often, is just how retail driven this version of the market is versus any other version. And I think there's valid reasons that where institutions do follow retail now, they follow this momentum. So there's absolutely every reason to think that if a retail momentum stock that has a lot of social sentiment on it, if people are piling on, that could be a good idea. But what we always just advise is just have a little more of a filter than that, right? Because Nvidia's got plenty of retail attention. CoreWeave has got plenty of retail attention. And Nvidia is just a much better choice given the valuations that it's trading at. Like you really, CoreWeave has to grow so much over the next 3 years to validate that kind of hype. And it's just trading at a crazy multiple. And most people don't even look at that. And it doesn't mean you can't make money off that. It just means, I'd much rather bet on other stocks that get attention, like Palantir, like Nvidia, like AppLovin. Those are three stocks that also have a very, very bright future, growth future, retail attention, that just trade at a much better multiple. And I don't feel like, I think that's the hard part about what retail does sometimes. They've taken this idea that that momentum stocks go up, and retail can push them. And they take that to the extreme as if that means just because there's retail attention, just because there's a lot of momentum and a lot of social sentiment, it means they're buying a stock at a good value. And those two are very, very different things. And this is kind of like how we talked about SoundHound, right? I do think that there's a correction coming for CoreWeave. I think that there's a higher chance of a correction coming for CoreWeave. It's not a certainty, right? I think there's a higher chance a correction is coming for CoreWeave than, say, Nvidia, right? I feel very strongly about that. Now, people read this in the wrong way all the time, right? It doesn't mean that a correction is coming for either of them. And often these probabilities that I'm referencing, no one else has, any visibility to, because they just see something go up, up, up. Maybe the correction happens, maybe it happens for both, and you don't really learn what is the one. But there are frameworks like earnings per share, right, that do help you have a higher probability of success. There's a higher probability of a strong correction for CoreWeave because of the crazy multiples that it's trading at. And that's just a fact. It doesn't mean that it's coming. It just means that there's a higher probability and that a lot of retail investors do not properly account for that risk.
And another large company that's reporting this week that I want to cover here today is Costco. And we've recently covered the differences of the way Target stock has traded and Walmart stock is traded. So where does Costco fit on that scale? Are they more Target or are they more Walmart? And how you think they'll continue to perform?
Yeah, I mean, we were just looking at Costco, I think, on a space last week. And we kind of have the comparison. People are pricing Costco in shorter term better than Walmart, right? And I think that makes a lot of sense. And Walmart has a higher upside. Costco kind of has a much better like blended score of upside and net option sentiment. And I think that's because the perception is that higher prices will hurt Walmart more than it will hurt Costco. Because Costco, you're already going in there. Like Costco isn't necessarily the best prices, but it's kind of the best price quality mix. If there's a perception, and I think also a lot of Walmart shoppers live in areas that tend to be more red, right? So I think if there's this added situation where there's kind of tension between Trump and Walmart, I also think that could hurt their sales, along with the perception that, oh, like maybe even if Walmart's prices raise the same amount as everybody else's, I think the perception is, oh, I only go to Walmart to get these deals. And if I'm not going to get these deals, maybe I should just go somewhere else. So I think that both of those things are a risk to Walmart. But if you kind of look at, the long-term view where Walmart's better, and it's just like, hey, this is going to get sorted out. And I think over the long term, Walmart might be getting a little too beat up in the short term, because at the end of the day, Walmart relatively can offer better prices than anyone. So even if there's some tension in the short term, or even if these tariffs are a more long-term thing, I think people are going to eventually come back and realize, once the headlines die down, that Costco just offers Walmart offers better prices than anyone else, and it's going to work itself out in the long term.
So I was reading the newsletter yesterday, and I saw a ticker of a company I'd never even heard of before, ticker KNSL, Kinsale Capital Group. I'm wondering, just why you decided to add this company, how it came on your radar, and just take us through the process of, like, I don't know if you are familiar with this company or if they are new to you as well, but just what was the thought process behind adding them into the mix?
I'm currently considering adding I've been watching it. I'm currently considering adding Palantir. But I'm multitasking poorly. I've been watching it. Hold on, let me just check Palantir's net option sentiment, because I might just do it to spare myself the ongoing watching, which left some money on the table for me and Wolf and Wolf Speed last week, because I had a busy day of meetings and I was like, I don't want to just watch this. All right, I don't think I'm ready for this. Kinsale, like, this is the funny thing. Like, sometimes I'm like pretty signal driven. And I actually don't even know what they did. I added them because I had Aries long, right? And also they were a mid-cap company, and I didn't really have a lot of mid-cap companies. So they were added just for diversification. But let's take a look at what they do. A specialty insurance company. So yeah, I mean, it was just that they looked, for a finance company, they looked good, right? In the screener, I think that they were top 15 based on their earnings, based on how far they are from their 52-week high. So I think it could be a good recovery play, and that's why we added it. Sometimes we're just very signal driven. It balanced out the portfolio well. Not doing particularly well today, but that's how it goes sometimes.
So it sounds like were you trying to add a finance stock and then you were just like scanning in the finance sector? Is that kind of what happened, or you were just looking to add a mid cap, or like what was the like determining factor in what you were even looking for?
I am adding Palantir. Hold on.
Palantir back in the
Yeah,
mix. Let's
a
see.
live ad. Here we go, and I'm adding it in trading too.
Palantir at about 125 per share right now, up 2% today. George likes it. I guess you think they're gonna make an all-time high pretty soon then, I would
Well, one
imagine.
other thing that I'm trying to do is I launched a screener. Oh, oops. I was like, I launched a screener this morning, and Palantir was at the top, but it is no longer at the top. I think it's because it got filtered out because its social sentiment dipped. No, net social. Oh, maybe it's technical flow. Oh, that's kind of funny. I'm trying to use the screener more. It was at the top. It is no longer at the top. That's kind of funny. But I was still looking to add it. Hopefully it works out. Sorry, what was the question again?
So when you
Kinsale?
were, yeah, what was like the determining factor of your search? Was it the finance sector? Was it mid caps? Like, how were you even scanning to
I
look to
was
find
looking
it?
for a mid cap company, and then it just fit in really really well because we were long Aries, and we weren't sorry, we were short Aries, a financial services company, and we didn't have any long. So I was like, okay, this is perfect because we had an unhedged Aries long position. So it just made, and then it was a mid cap that was exposure, so it was two exposures that kind of fit in the portfolio well.
Cool. So I hope if anybody saw that name last night and was curious, that helps you out because I was myself. All right. I want to get into the AI job cuts that are beginning. We actually posted a photo of it on our Twitter, listing some of the companies that have already began cutting jobs. You had the silent firing article. It seems like we were ahead of the curve on this. So if AI is beginning to hurt the job market, at what point is that going to hurt the stock market if people, if there's job loss and unemployment's going higher? Obviously, the companies that are cutting jobs are seeing probably benefits in their earnings, but like, what is that balance? Can it work together, or is that setting up for some type of pain along the way?
Um, so I think like the job market and the stock market are two separate things. If you're asking for a reason why large cap growth stocks have done so well, I think it's because people are actually pricing in efficiencies for AI and cutting jobs. So I mean, like I think people are already anticipating this and prioritizing these big stocks in the market. It might be, one of the articles I also shared was like smaller companies filing for bankruptcy. Um, and so I think that's what we're dealing with. I think there's um there's definitely something where I think we're just going in that direction. The smaller ones are basically going to, drop off more, and nobody's necessarily going to care. Maybe that'll hurt the IWM, but it's not necessarily going to hurt the S&P 500. And then these S&P 500 companies, these QQQ companies that are using, AI to cut their costs, limit headcount, maybe even roll out new products without having to hire people, like those efficiencies are going to rise. And that's, pretty much the future we're heading for.
So, can a company like Salesforce ride that wave? I just saw a story today about how they're acquiring a data management company, Informatica, for $8 billion. And it seems to me like if AI workers are going to be a trend, I don't know if you're thinking like the Mag 7 companies are going to develop this tech from within, or if a company like Salesforce is going to provide that service for other companies. But so, like, how do you feel about Salesforce and their place in that whole AI wave that's going on?
I mean, these acquisitions, especially the prices that they're at, um, it's it's always kind of you always have to wonder where the value is, right? Because I think some of these high priced acquisitions, actually what they're counting on is the hype around the acquisition to drive the stock price and then just kind of get a return from that, just as much the efficiency gain, because the prices that these companies are paying for, like you're really talking about a long tail to add those efficiencies, because if you think about Salesforce, right? Like how many new customers are they really like acquiring from an acquisition like this? I don't know. Probably not that much. Probably not that many more than they would have already, right? So the question then becomes, all right, how much efficiency, how much further product, how much of that is being added? And at that acquisition price, it's got to be a lot, and it's very hard to pay for unless you're doing like what we're talking about, where they're actually anticipating the news around it to add to the perceived value of the company, which ends up being the value that they can, raise money, sell shares, borrow against, things like that. So that's where it becomes, and that's why it's such an esoteric concept of how to like properly assess these things.
So we have one more topic to get into today before we do the switch over for the model portfolio update. We are approaching 1,500 total people that have tuned into the stream. So thank you, everybody. I hope you've appreciated the topics and liked the insights so far. If you have, hit that like button. We would appreciate it. But I want to get into here the nuclear stocks, which we've been covering the nuclear and the quantum much more recently, but we got another update that's sending shares of those companies higher. Trump signed an executive order last week to speed up the process that it takes for these companies to develop their nuclear reactor sites. Some stocks that are reacting are Oklo, SMR, NNE. How bullish do you think this is for these companies? Do you think that the executive order will actually be able to um, create a faster timeline? Because I'm wondering, like, if states still have their own quarrels about it, like, will this override that, and will it actually make an impact? And then all of these stocks ran a lot towards the end of, or really the beginning of this year, but then they lost a lot of those gains. Is the second time the charm, or are we setting up for a similar situation again, where we're getting ahead of ourselves and then these are going to pull back a lot after they run?
I mean, anyone that's heard me talk about this topic probably knows how I feel about this. It's like it's not just a second time, right? We're going to see this cycle continue. Like these products are pretty far away. Like, and there's a lot of different estimates of how far, but they're pretty far away. So we're going to constantly get this, hype build. It's the same thing that we're talking about with IPOs. You get this hype build, and then, it gets to a price that more and more people are just like, I got it. Like, I'd be an idiot not to take my gains here, right? And then some people get out, it starts to fall, and we'll see these peaks and valleys, and until the next announcement where it's just like, oh, it's this, a site's been built, or this partnership has been announced, or another executive order, maybe some funds are dispersed, in terms of subsidizing these build outs. You never know. But that's the one thing for sure. You don't know the mechanisms, but you do know stocks, the stocks that have this kind of hype that definitely have a long-term value. But the timeline to that is super unknown. We're just going to go through these peaks and valleys. And that's all to say, I really advise people to think about taking profits, and whether it's putting a trailing stop loss on some of these runners. One of the things that I always did when I traded was actually had no problem selling everything, taking my profits. So what about the taxes? Take all the profit, right? Especially if you have a big gain, right? Then use some of those profits to just buy some long-term call options. You take 10% of what you gained, right? And put, or 20%, put it in call options that are way out there, right? Then, you retain a lot of upside, and then you just took home 80, 90% of your gain. You can put it in safer things. You can put it back in shares of things that might be earlier in a momentum cycle, right? Because you could have easily taken, take your nuclear gains, and then, take a chance on Nvidia for, this earnings, but maybe for like a bit longer, because that might have a lot more room to move up, especially if it has good earnings, right? And I think if you're always looking to do that, and being practical about it, then you can really start to gain more. And I think that the long and the short of it is, I think people are often too worried about taxes, right? When it's just like, when you have a big gain, right, you should be worried about keeping that, putting it into something sustainable, and also looking for the next thing, right? And I just kind of advised you in a bunch of ways. I mean, the other option is, but it's like you're not grabbing the same gains. You could always sell a little bit of your stake and then just buy puts, buy insurance on the way down. That basically says, okay, I'm going to hold this for a long time. But I want to just make sure if this does, reach its top, I've got some, I'm getting some profit on the way down. I'm not just losing my shares. Both of the ways that it goes. I actually there's some people that like covered calls. I don't like covered calls. Because you're basically selling your upside. And for like stocks that run like this, you don't know if it's going to run another 20, 30, 40% before it reaches. That's the crazy thing about momentum stocks, which is why I advocate for those, one of those two strategies.
I think that's great advice right there. And with that, it is now time to do the switchover. We will be getting into the model portfolio update and SPY net option sentiment back at zero. So we'll see what George decides to do, everybody. Stick around, and we'll be right back. with George
All right,
on the
thank
other
you.
side. And thank you to everybody who's tuned into the stream today. We've had over 1,500 people now. So great viewing so far. Let me just call out one more time for those of you that are still in here. If you guys want to send us a like, that would be super awesome. We appreciate it. I see on YouTube we are close to hitting double digits, 10 likes on the stream. So just one more to go, one more kind person hitting that like button. But yeah, like I said, SPY net option sentiment has currently gone back down to 0. We saw a huge pop all the way up to 1 earlier on the stream, so but not anymore. We have faded all those gains right back down to 0. Thank you, Nicole, for the fire emojis in the chat. And taking a look at the QQQ, we are also seeing a reading of 38 now. So QQQ is getting very close to flipping into bullish territory. It's been knocking on the door here today as we opened up green across the board in the markets. QQQ got as low as 5 last week, May 23rd. So we're seeing a nice recovery there. We'll see if the SPY is set to follow by the end of the day or if the QQQ will go back down. Obviously, maybe the QQQ reading we're seeing is in anticipation of the Nvidia earnings set to come tomorrow, which will probably have a large effect on the market. One thing to mention here as we turn over into the model portfolio is GME. Just 100 net option sentiment continues to be one of the better looking stocks in the signals. And I think I saw today that they were rallying. So let's see. Yeah, GameStop up 5% today and up 39% in the past 3 months. So what's going on with GameStop? I mean, I know they're buying crypto, but
Yeah, is that for the is that what the flames are for? The GameStop?
yeah, probably. Yeah, GameStop, but I mean, our signals have been on it. It's been one of the better looking stocks. I mean, it's been in the short term bull list like almost constantly. So, but yeah,
Yeah, I mean, what I see it as is I see it as a few things. I think knowing the GameStop like meme stock crew pretty well at this point. I think that any volatility or risk, a lot of them view that as a positive. Like institutions are going to blow up and things like that. So that's the first thing. Then I also think, yeah, I think the alignment with crypto is there. And then I think it's one of those things, especially for the people that believe in the mother of all short squeezes. I think that people believe that it's only a matter of time before shares have to be covered, right? So I think with the free cash flow situation that the companies have, I think a lot of people view that as the victory is already there. I'm not really there on a lot of points, but I do think that the retail fervor makes it a very attractive stock in volatile markets, just generally. But I wouldn't put money into it if the signals didn't, love it as much as they do. But that's why we made the signals, right? To help us through that. It's not something that I would normally just come to on my own, but the signals pointed me there. And look, we have 2 positions in our trading portfolio. And it's our biggest active winner in our investing portfolio right now.
I was curious with GameStop rising if AMC would be too, and they're up 21% today. So we're going to get a lot more comments very soon. That's what that means.
I mean, that AMC video is just hilarious. All right, let's get that. And then let's get this. We'll see. Sometimes this connection is a little unstable, but I bit the bullet and I got an external Ethernet thing because I just had my meetings. This is an old computer. I've had it since 2016. Oh, look. It's interesting. It's like growth in small caps overall on a comeback. Let's see. I have to finish. I have to finish right on time today. I'm right up against the meeting.
tech and consumer discretionary continuing their runs. We have the right bull and bear exposure to a lot of those areas. So we will be opportunistic.
Let's see. Got that. Oh, already had this ready. No. Okay. 34. Come on. Okay. Seven. Okay. Okay. All right, guys, we still have a wolf open. Why are you being like this? I think I see 3 Aries open, so let's get rid of one of those too. Okay. Okay, anytime you'd like to get those market caps in there would be helpful.
SPY net option sentiment. Oh, SPY is 0 and QQQ is 38.
Yeah,
Has us cautious, but hard to ignore the move up with the QQQ.
Let's see. There we go. All right. I don't think that's right. Yeah. Yeah, it's just like, okay, we definitely want this. Let's get more of that. OGN. That might be low. All right, we're going to take a ride on some of these. Already in that. Damn, GME just. Oh, that's kind of. All right. All right. I feel good about this. Okay. That we're not going to send out yet because we want to send it out on time. Aries, is Aries a win? All right, we're going to have to take care of this later. All right. Not to handle now.
All right, so George, you got to switch over to your meeting. So I guess I'll begin wrapping it up here. Thank everybody for tuning in. We're going to be back live Thursday at 3 p.m. this week. So one day later than usual, but there'll be a lot to react to, I'm sure, with Nvidia set to report. So thank you all for tuning in. We'll see you guys then. Thank you, George. Bye, everyone.